Hello everyone, you are on the Profit Point channel. Let's summarize the results of this week in the world of investments. 3 U.S. companies will launch a private space station into space by 2027. She will receive tourists. Starlab Station agreed to build nanoracks. Voyager Space, and Lockheed Martin. It will consist of a 60 kilowatts propulsion system, a large robotic arm for handling weights, and a modern laboratory for research. The station will be able to receive tourists, conduct research and participate in commercial projects. The alliance wants to serve customers with demand for space services, such as researching various materials, growing plants, and serving astronauts. Nanoracks will develop Starlab, Voyager Space will lead strategy and finance, and Lockheed Martin will build the habitation module and other spacecraft. In November 2020, Axiom Space signed contracts with the first space tourists to travel to the ISS aboard Elon Musk's SpaceX Crew Dragon. Walmart has installed Bitcoin ATMs in 200 stores in the United States. The ATM manufacturer wants to increase their number to 8,000. Walmart has begun testing Coinstar ATMs in its stores. Through it, buyers can exchange cash for a cryptocurrency voucher, Bloomberg reports. After that, the voucher must be registered on the Coin website. There is a commission for the exchange. 4% for buying Bitcoin and 7% for exchanging it for cash. There are Bitcoin ATMs in other stores in the United States, but Walmart will greatly increase their number and make cryptocurrency more reliable for those who do not believe in it, said Sam Doctor, Strategy Director and Head of Research at crypto brokerage company BitOuta. Walmart fell victim to a scam in August. On behalf of the company, they published a release in which they stated that Walmart will accept Litecoin for payment. After that, the value of the cryptocurrency increased by almost 40%. I worked on 2 cloud projects at once and did not release a single one. Why IBM Cloud was doomed to failure in advance. The purchase of a hosting provider that was not ready to work with large IBM customers, and internal rivalry prevented the creation of a competitive product. And so customers went to AWS, insiders say. In November 2013, the then CEO of IBM Ginni Rometty announced that the IBM Watson supercomputers should be transferred to its own Power microprocessors and connected to the SoftLayer hosting, which the company bought for cloud development. SoftLayer, like all major developers at the time, only supported x86 microprocessors from Intel and AMD. But Power's developments, according to experts, allowed to improve the performance of corporate systems that worked with AI, analytics and cloud applications. So the company did design a barely working sample and presented it at the IBM Pulse conference in February 2014. The engineers realized that in order to truly integrate computers into the SoftLayer environment, they would first have to rewrite part of the Watson source code base for the cloud. And secondly, quickly find and configure enough Power servers to run them in x86 architecture, the newspaper writes. It was with this that a series of IBM experiments in the cloud market began. For 2021, the corporation offers a range of cloud services, including public and private clouds, as well as hybrid multi-cloud. But it will never become an industry leader, former and current IBM employees suggest. She missed out on many years because she prioritized computer sales and the private needs of customers who didn't trust the cloud at the time. IBM bought a hosting provider to scale the cloud's business, but it was not the right fit. She started working with cloud computing in the 2000s, but rethought the approach in 2013 when she participated with Amazon Web Services, AWS, in a tender to develop cloud solutions for the CIA. Upon learning of Amazon's victory, the company turned to the U.S. Audit Office and asked to reconsider the decision. But the protest was rejected, and AWS signed a 10-year contract with the agency for $600 million to gain a foothold in the market and attract business customers. IBM bought hosting provider SoftLayer for approximately $2 billion. But there were problems with the integration. The company cooperated with large clients, and the provider focused on small and medium-sized businesses, a market where savings are more important than functions and accessibility, the newspaper writes. With this in mind, the provider company designed the services. It had just 13 data centers, with virtually all of its servers running on third-party Supermicro boards. Other leaders of the cloud market, meanwhile, developed their own servers, and they all dealt with massive enterprise tasks. Several years later, IBM's sales team merged the company to sell an enterprise software suite with cloud services. However, most of SoftLayer's developments did not meet the needs of corporations. The data centers had low fault tolerance, and the servers did not pull the download of heavy applications. SoftLayer also did not support virtual private cloud technology that would allow customers to control their applications in the cloud. The company implemented it only in 2019, and AWS, back in 2009, without experiencing problems with the load on the servers. In fact, the IBM management initially understood what difficulties they would face, they just hoped to quickly deal with them, the newspaper writes. But internal politics got in the way, the company held on to old customers, so it created side projects for private requests. And cloud development faded because of this into the background. Two IBM teams worked on the same technology. Several years after purchasing SoftLayer, IBM executives realized that the development approach was worth revising. To do this, they hired specialists from the telecommunications company Verizon, that had its own cloud division, so they could offer IBM something new. In 2016, John Considine took charge of IBM Cloud to develop a new cloud infrastructure. He wanted to change SoftLayer's approach and launched a project codenamed Genesis in an attempt to build an enterprise-grade cloud system from scratch. Gradually, the company realized that it would probably not be able to scale development to compete with AWS or Microsoft. IBM used the Intel Red Rock Canyon network chip, which during testing did not support the simultaneous launch of 1,000 virtual machines. In addition, the corporation still did not support the virtual private cloud technology that most potential customers were expecting. Failures split the IBM Cloud team into two groups. One believed in Genesis and continued to work on the project under the guidance of specialists from Verizon. Another, along with a team of IBM researchers, undertook to design a separate architecture called GC, which, in their opinion, would be scalable. It would replicate the design of the original SoftLayer infrastructure while still supporting the virtual cloud technology. Genesis, as some employees expected, never entered the market and closed in 2017. After which IBM had to write off almost $250 million of Dell servers purchased for the project, and project managers began work on a new architecture, codenamed NG. IBM hoped all this time that the architectures would be compatible with each other, but due to subtle design differences, this did not happen. In 2019, the company released both developments to the market, but one of them, GC, nevertheless closed in early 2021. The corporation declined to comment on internal disagreements. She just said that she had been working on the most secure enterprise-class cloud for more than 2 years and connected all the key developments to it, from software and AI technologies to fault-tolerant systems, e-servers and power microprocessors. Does IBM have a chance to catch up with the competition? While the company was working on two projects at once and did not release a single one, many regular customers went to competitors like Amazon, whose services were stable. The latter is also offering discounts on multi-year contracts in 2021 to attract new customers. IBM ultimately focused on one project, added private cloud support, and serves thousands of customers. In 2018, it also bought Linux vendor Red Hat for $34 billion to compete with the leaders. But the company has spent years on slow development, suffered from poor management, and has cut capital expenditures in recent years. And it risks hindering the development of an expensive cloud service that still often fails. Candy Digital, a sports-themed NFT startup, raised $100 million at an estimate of $1.5 billion. The company will launch a token trading platform in October. The round was attended by Insight Partners and SoftBank, as well as Chaos Ventures and Athletes Syndicate. The startup was launched in 2021 by the founder of the CryptoBank Galaxy Digital Michael Novogratz, entrepreneur Gary Vaynerchuk, and CEO of the online sporting goods store Fanatics Michael Rubin. Candy Digital creates sports-themed NFTs. For example, he released the Los Angeles Dodgers NFT in honor of the World Series, the decisive games of the Major League Baseball, MLB, season. The company will promote sports-related NFTs. In October, she plans to launch a beta version of the token trading platform. MLB will partner with Candy Digital. NFT, non-fungible tokens, virtual digital unit, in the blockchain network that cannot be exchanged for each other and can be bought and sold as physical assets. The NFT market grew sharply in 2021, its turnover exceeded $400 million, wrote CNBC in March. At the same time, the artist Beeple sold a digital collage of 5,000 drawings for a record $69 million. In June, sales on the NFT market for the month fell by almost 90%. Chia's hard fork has a market cap of over $1.9 million. Project news. Over the past 24 hours, according to the website Xforks.com, on October 21, 2021 at 11:40 p.m., Moscow time, the Chives coin, XCC, rate reached 0.0193 USDT, and the market capitalization of the coin exceeded 1.92 million USDT. At the moment, the coin is the most profitable, according to the calculator's calculations. The income from 1.01 Tbits is more than 2 times higher than the income of Chia. This makes Chives attractive to Chia miners who are actively involved in the project in order to get their investment back. The rapid growth of the coin rate is associated with the approaching start date of the sale of game pets for the future Chives NFT game, October 30, 2021. But it should be noted that recently there have been news about the project's intention to go public, updates and marketing activity. Now users have the opportunity to buy and sell XCC coins directly from the mobile phone browser, bypassing the long synchronization of the wallet on a PC. According to the Chives Swap Exchanger, today the price for XCC already exceeds 2 cents. The trading volume for the last 2 days is $34,000. For comparison, other forks of Chia, which are already listed on exchanges, have trading volumes 10 times less than Chives. Investors love young and promising projects that will allow them to multiply their investments in the future. Is Chives one of them? I often hear from people the question, what is unique about this project? Therefore, now I will try to tell you my vision and prospects. The project does not have pre-mining, which makes it more transparent for miners and investors who do not need to worry about the fact that one day the developers decide to sell all pre-mined coins and crash the rate. The project has no eco. This point logically comes from the previous one, since such projects, as a rule, use their own pre-farm for this. The project is developing its own ecosystem, which includes a mobile wallet, a centralized exchange, the future Chive's NFT game, in which XCC will be used as a means of payment. In a year, it is planned to change the economic model of the project and launch masternodes, which will receive 45% of the farmer's reward for the block. The project uses the autonomy of the community to reward users for public work, publishing videos, publishing articles, maintaining social networks, etc., thereby making the coin available not only to miners and investors, but also to ordinary people who are ready to work. By the way, I will get 200 XCC for this entry. According to unofficial data, in the near future, coin holders will be able to receive passive income from XCC staking. Staking is the process of storing or blocking a cryptocurrency in a target wallet for a specified period of time in exchange for reward and passive income in the cryptocurrency. Only 3 months have passed since the launch of the project, July 17, 2021, but today the coin can be bought for XCH and USDT. Its own exchanger and web wallet have been launched. The computing capacity of the network exceeds 137 petabytes. The project announced its intention to be listed on the exchange and create its own NFT game like Uxie. The value of Donald Trump's social network shares rose by 275% per day. Former U.S. President Donald Trump announced the launch of his own social network Truth Social and immediately launched it on the stock exchange, where it shows high growth. The social network is being launched through the merger of Trump Media and Technology Group and SPAC-based Digital World Acquisition Corporation, which is already listed on the NYSE. Digital World Acquisition Corporation, ticker, DWAC, shares soared 275% today to $48 on the Nasdaq. Facebook, Twitter and other online advertising-based companies fell 2 to 6% after Snap reported. Snap reported revenue below analysts' forecasts due to privacy changes in iOS 15. Snap reported $1.07 billion in revenue versus Refinitiv analysts' forecast of $1.10 billion. This is due to the privacy changes in iOS 15. It is now difficult to track ad performance. The companies also cut advertising costs due to supply disruptions. They do not want to advertise what is out of stock, commented on the results in Snap. After the close of trading, Facebook and Twitter were down 6% and 5% at their lows, while Alphabet and Pinterest were down 2%. Shares of online advertising companies Trade Desk and Magnite fell more than 5%, according to CNBC. Snap shares fell 21%. iPhone users with iOS 15 after the first launch of applications now see a notification that the social network is collecting their data for more personalized offers. In September 2021, Facebook announced that social media ad performance data dropped 15% due to new regulations. Bitcoin price dropped below $63,000. On Friday, October 22, the price of Bitcoin drops. At 9:40 UTC, the first cryptocurrency is trading at $62,797.65, minus 2.77%. According to CoinMarketCap, Bitcoin demonstrates a decline of almost 3% during the day and is trading for $63,000. The coin began to correct after a strong impulse of growth, but at this stage it is a very insignificant price pullback in comparison with the scale of growth. Moreover, it was quite expected and will not cause panic in any of the market participants. The community as a whole is very optimistic about the medium-term prospects of the first cryptocurrency. There are reasons for good sentiment, as the SEC has approved the launch of another ETF from Valkyrie, which will begin trading in the near future on the Nasdaq exchange. It looks like the series of ETF launches will be a new impetus for Bitcoin, on a par with the fundamental events surrounding Tesla's investments. The Bitcoin Dominance Index is showing a decline, which is considered a positive sign for the market as investors invest in a wide range of digital assets. The total cryptocurrency market capitalization hovers around $2.5 trillion. The RSI index for the BTC/USD pair on the daily chart showed a sharp decline yesterday from the overbought area, which was fully reflected in the price dynamics of Bitcoin. But it is already clear that the indicator has stabilized and is showing attempts to return to growth. It is likely that we will see a similar picture today for Bitcoin. Bitcoin and Ethereum unstoppable, attack on highs. The market is still following the boom in the cryptocurrency sector very closely, which welcomed the launch this week of the first Bitcoin futures ETF, the ProShares Bitcoin Strategy ETF, NYSE, BITO, with open arms. After the launch of the first fund, there were rumors about the imminent launch of the second, Valkyrie Bitcoin Strategy ETF, Nasdaq, BTF, and against the background of this news, cryptocurrency fans continued to buy Bitcoin, which surpassed the record high in April this week and even at some moments traded over $67,000. The day before, BTC was trading above $66,000, and the bulls are still waiting for a new high. Elon Musk, who posted a tweet praising the levels of Bitcoin, $69K, and Ethereum, $4,200, is not far behind. Alejandro Sala, manager of Bitpanda from Spain, noted that this new assessment is just another step in considering a consolidated digital asset, conceived by many as digital gold of the current generation, with incredible potential that more and more institutional and individual investors are aware of. The expert finds that today it is already difficult to find an investment portfolio that does not include cryptocurrencies, especially after the support that large companies, reputable leaders and institutional investors constantly provide to the entire industry. In any case, the crypto asset industry is still very young and has a long way to go before it reaches its full potential. Not only Bitcoin, but another currency, Ethereum, is showing impressive gains this week, also in the midst of optimism following the launch of the ETF. As analyst Pinchas Cohen rightly pointed out, Bitcoin is getting all the attention, while Ethereum, the second largest digital currency by market capitalization, is neglected, which means that it is still undervalued, which is already a potentially bullish factor for ETH/USD. Those bulls that were smart, or lucky, enough to compete in a 3-day rally or even stay on a 4th day amid higher intraday prices won a whopping 16%. This is an exceptional upswing in such a short period of time, Cohen wrote. More than 1 million people are waiting for the Robinhood crypto wallet. There are already more than 1 million customers on the waiting list for the recently announced Robinhood cryptocurrency wallet, the company's CEO said Thursday. We have deployed a waiting list for wallets. Many people have asked for the ability to send and receive cryptocurrencies, transfer them to hardware wallets, transfer them to a platform for consolidation, and the waiting list for cryptocurrencies now exceeds 1 million people, Robinhood CEO Vlad Tenev told CNBC. The online broker announced last month that it is testing the cryptocurrency wallet feature, offering 7 digital coins, including Bitcoin, Ethereum, and Litecoin. You can have a wallet. You can send people cryptocurrency from that wallet to their wallet, 10F said. The technology has certain advantages that make it global and available by default, which makes it very interesting. The startup debuted in cryptocurrency trading 3 years ago, but more than half of Robinhood's transaction revenue last quarter came from cryptocurrency trading. This figure rose from 3% a year earlier. The new wallets will allow customers to consolidate their digital coins into one account. Customers will then be able to trade, send and receive cryptocurrency from other wallets. Rivals Coinbase, Nasdaq, Coin, and Gemini already offer this feature. Bitcoin hit a record high on Wednesday, surpassing $66,900, as investors became more interested in digital assets. JP Morgan said Thursday that it believes the price of Bitcoin is rising because investors see it as a better hedge against inflation than gold. Other investors tied the record to the launch on Tuesday of the ProShares Bitcoin Strategy ETF, which tracks Bitcoin futures contracts pegged to the future price of a cryptocurrency. Crypto will certainly remain an asset class, and its ease of use and global nature, I think, made it attractive to many, 10F added. Robinhood will report its quarterly results next Tuesday after the market close. The company warned investors about a slowdown in trading activity in the third quarter, which could hit the broker's revenue. The Fed has banned its officials from trading stocks. The Federal Reserve has severely limited the ability of its senior officials to trade in the market, writes Yahoo Finance. The U.S. Central Bank has introduced a wide range of new rules that restrict any active trading by the leadership. In particular, from now on, they are prohibited from buying any individual securities, that is, stocks, bonds or derivatives. The new restrictions actually only allow you to buy diversified investment vehicles such as mutual funds. If any of the Fed officials wants to make any purchases or sales, they will have to provide 45 days advance notice and obtain prior authorization. In doing so, they will be required to hold these investments for at least 1 year, avoiding buying or selling during periods of heightened stress in the financial market. Fed officials are still working on the criteria for this stress, but said that the situation on the markets in spring 2020 fits this definition. The new rules also increase the frequency of public disclosures by Reserve Bank presidents, introducing monthly reports instead of annual ones. The restrictions apply to politicians and senior officials at the Fed headquarters in Washington, as well as 12 regional branches of the Federal Reserve Bank. The new rules will take effect in the coming months. Fed officials said the changes are likely to require a divestiture of assets that do not meet the updated standards. Fed Chairman Jerome Powell said the tough new rules were put in place to convince the public Reserve that all of our senior officials are focused on the public mission of the Federal Reserve. Over the past month, the central bank has been engulfed in a scandal fueled by massive financial bets made by regional Fed presidents Robert Kaplan and Eric Rosengren. Both resigned from their jobs after reporting bets on real estate and individual stocks. Not so long ago, it became known that the head of the Fed, Jerome Powell, sold shares in the amount of $1 to $5 million from his personal account on October 1, 2020, shortly before the sharp drop in the Dow Jones Industrial Average.